Fortress Income Fund Incorporated Capital Property Group and has two classes of shares, A and B units. You're going to unpack that for us.
Yeah, and remember, this is one that has a focus on the logistics. Hey, let me do that again. A focus on the logistics premises. You know, like the Isando Business Park or like
industrial
close
businesses.
to airports, and that was a focus
Industrial
of theirs.
property,
and we
rather.
know our economy has shifted from being a manufacturing one to a import-driven one. But the A and B units, you just got to understand that to get the value of this thing, Fortress, you have to add the A's and the B's together. It gets you to that 55.7 billion rand.
Can I correct you? We've never really been a huge manufacturing hub. We're trying to beneficiate.
Well,
so
there
we're
used
trying
to be
shift.
mining and manufacturing type companies in this country, but now everything gets made in China.
We need to beneficiate. It's the key for the African economic growth story. Anyway,
Okay.
Combined market cap, 55.7 billion rand, trades on a yield of 7.9%. Share price graph, Nick Sorour.
Well, there's two units here, so the share price graph, depending on how you're looking at it, will be different for both. Tremendous growth in the B units, fairly straightforward growth on the A's.
And we're looking at the A's.
Okay,
yeah.
if you're looking at the A's, what is it now? About 17 rand, am I right? Yeah, there we go. So also pretty much sideways. It's very important to talk about the A and B units.
What's the difference? Why does the one price look better than the other?
And it's going to be hot or not depending on which unit we want to go for, actually. So this is what's important to understand. So the A units have a fixed amount of growth attached to their income. Remember, I've been talking about income and growth throughout this whole story of mine. They get 5% flat, essentially. The B units get anything else that the company's made. So for example, the company increases their earnings by 20% and they're going to pay out an increase of 20% in their income. A units get 5, B units get 15. That's fantastic if you're growing by 20% on 20% on 20% on 20%. Eventually you get to a level where you have a very large base. And it's very difficult to grow on a large base. So 1 year you might only grow by 5%. So then your A units get 5 and your B
Even
units,
I can work out what that
your B units get 5 and the guys are like, well, we were getting 15 or 20. The point I'm trying to say to you is that there is risk in holding the B units, especially if you're working on a very high base, which Fortress is. What I mean by high base, Fortress is...
Wait, there's the B price.
The B price.
Oh, we got the B price.
Yeah,
there we go.
So which one? Can you give me a...
Well, look at that growth. Can
which
you
is
see
the
that?
hot one? Which is the hot one?
The hot one for me would be, for the moment looking at Fortress, would be the A units currently.
So let's drop the B. Let's have one hot. Let's have one hot stock in this discussion.
And the reason why I would go for that is I think there is risk to the downside of the earnings growth with regards to the B units, and you might see a bit of an upset there in the share price. Something similar happened with Hospitality B, if we can remember that as well.
So there we go. We're going towards a hot on the
that's
A.
fine. I'll be happy to join Nick on that and say hot. Just want to make one additional point. Great management team, Barry Stuhler, Des de Beer, all of those guys, they're all the same people. They're the same people we're going to talk about in a minute with regard to Rockcastle. And that is a growth area. And I think the market underappreciates the attractiveness of this really big
So we have
entity.
our hot for our discussion today. Thank you.